Welcome to another episode with the Kelowna Real Estate Update for March. And today we have Joshua Stetner here, a seasoned real estate agent. And we're going to be talking about all the updates here, including the first-timer home buyers exemptions, the newly built home exemptions, the BC home flipping tax, which is something very new. So we'll talk about that. And most importantly, we're going to talk about the Airbnbs and the changes that we're seeing in the market and what it's going to bring to 2024 and what you need to know and what options, I guess, you have moving forward and what's the best one for you. So, Josh, let's start with the Airbnb and the band that is in BC, and just wanted to really get some of the details and basically give listeners the options that they have, right? Because we're seeing that you're no longer going to be able to rent and do short-term rentals on your apartments and townhouses or whatever that is, unless it is your primary residence.
Yeah, well, even in Kelowna, though, it won't, even if it's your primary residence, they won't be issuing you any new business
Yes, so,
licenses.
so there's a ban, there's no more new licenses. So unless you already have an existing license, you will not be able to apply for a new one, right?
Right, in Kelowna specifically, just because they've
In
gone
Kelowna
above and beyond
specifically,
the
yes.
provincial legislation as
So
it
why do you
pertains.
think that is? I mean, we were surprised just to hear that this is what's going to be happening, and then the city of Kelowna actually went a step further and said, look, we're not going to be issuing any new licenses for Airbnb, even though it's your primary residence.
Well, number one, I think was just they wanted to be on the Kelowna always wants to be on the forefront, whether it's their official community plan, their OCP is always seems to be ahead of other municipalities. I think the big thing though was that they wanted the city of Kelowna specifically wanted to keep buildings like Playa del Sol, Discovery Bay, Aqua, Brooklyn, Sunset Waterfront Resort, those places continuing to do and allow short-term rentals. And perhaps if they were more stringent on their short-term rental allowances on primary residences, especially in homes, that maybe the provincial government would be more lenient on making those exempt. The places like Discovery Bay, like Playa del
Right.
Sol, and the city did appear to push to try and get those exempted from the legislation, but obviously to no avail. So which has kind of put us into
Right.
this
And so
position
now
now.
now there we have the situation where, some of the pre-sales like Aqua, right, and all of this, basically people were investing their money with the potential return based on that they will be able to do a short-term rentals, which now is off the table, right? So
Mhm.
so that's one thing. And obviously it wasn't just the case for Aqua, it was for many other places where people have been operating their Airbnbs, including Discovery Bay, lots of places on Sunset and everywhere else. So what options, obviously, the people that are owning and getting into this situation, they have until end of April, I believe,
Yeah, so May
to
1st
and
is
then
when the legislation kicks in, and a lot of times in those units, they'll have students in until the end of April anyway. You've got college students or university students
right.
in a lot of those
So they
units, and because those students
yes.
leave, and then you do the short-term rentals essentially from May to August.
Yes, and I think that worked really well because lots of people would and most of the even bylaws said you have to have a long-term tenant there for 6 months and then you can do 6 months of Airbnb, right? Which worked out really well because you would get students in there, you would be exempt from the speculation tax, and then you could make up the money for all the maintenance and extra money for taxes during the short-term rental period. Because if you would have one or two bedroom apartment, you could make anywhere from $4,000 to $6,000 a month during the peak season, right? So
Hmm.
now that's not going to be the case. So obviously people will have option to find a longer term tenant. However, that might not cover all of their expenses because they paid a premium
Hmm.
with the potential income from short rentals, right? So,
Right, yeah, they've paid more
um,
for that unit because it allowed at the time for short-term rentals or higher revenue for
yeah. So,
them.
do you seeing that lots of people are now putting their units on the market, or what is obviously they have either sell, they can rent it long term. Those are kind of the most, I guess, the top two options that they have, right?
Hmm. Oh yeah, what we're seeing is a lot of people either wanting to sell, talking about selling, looking for at what a long-term tenant might get in return
Yeah,
for the property, and then some of them are even looking at doing just summer rentals because you can do so. A short-term rental is now going to be classified as anything less than 90 days.
that's
So there's
right.
definitely some owners right now that are looking at doing 3-month rentals, which summer rentals. And just speaking to a property manager, you can get a fully furnished right now 3-month summer rental for anywhere like 1 bedroom for around $3,500 a month to a 2 bedroom and in Dan at around $5,000 a month for the summer in
Right.
Kelowna. So they're still
So
looking at
they,
those potentials and seeing how that will play
yeah.
out and if there's going to be a demand for that.
Yeah, and I would mention also that when I was reading through the new legislation, like they actually will be cooperating, and there's going to be a new government body overlooking and working with some of those short-term platforms in regards to making sure that you have a valid
Hmm.
business license for your short rentals, and that you actually everything is up to their standards and you meet all the requirements. It's your primary residence. And if not, they actually can request the information for those platforms. That's my understanding. So you got to be very careful because I think that they'll be looking for, especially the first, few people to make their point and to show
Set
people
an
that, hey,
example.
this is
Yeah.
no longer a thing. So they'll be setting an example. So I would be very careful, especially in the beginning. I'm sure that there might be some people that find a workaround, but from my understanding, the penalties, the fees you could get are pretty high. So definitely you need to consider make sure that everything that you're doing is up to their new bylaws and standards.
No, exactly. And I think it's going to be interesting to see how Airbnb works with the government just because they're not necessarily wanting to be punitive to their own clientele, Airbnb to their customer. But yeah, it will be
Yeah.
interesting to see how they work with the government and it's I think there's gonna it probably have to be because I imagine that some people will still continue to try and do short-term rentals. So we'll
Oh,
see
I'm
how
sure
that.
they will. Yeah. Right? Everyone's trying to do it. Just to wrap up this Airbnb, I would say that, obviously, I think it's not quite fair, in my opinion. I think that some of the people that had existing Airbnbs should have been grandfathered in, but I understand that the government wants to create more long-term opportunities for new tenants and people that are coming into the country and everything, because it's quite crazy what it actually costs to rent a place in the Okanagan, right? And
Hmm.
I think it's partially also not just the low supply, but it's also the cost of borrowing. And when you really look at the market, now it's almost, if you were so grandfathered in with the low rent payments, you almost are better off than, or your payments are now, it's one of those weird times, they're lower than actually owning a property,
Hmm. 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 No, definitely. And I think
right?
there's the pendulum swings both ways. So I think you can understand from both sides how this legislation affects a seller or an owner who had purchased it
Yeah.
at a high premium and now cannot get the summer rental revenue. And then also from the side of a potential tenant who is having a hard time
Yeah.
finding an affordable place to live. So there's definitely
The
two
one
sides to
thing
it. Hmm.
I think that the tourism in Kelowna is definitely going to get hurt by this and the small businesses because it's going to be, in my opinion, and we'll see how it's going to play out this year because it's going to be the first year. But really, like, there's going to be a limited amount of inventory in terms of the rentals. Like you basically have only hotels and some of the ones that already had license and still have it as a primary residence. But I think that like I don't have the real numbers, but I think 50 or more percent might be eliminated by this new legislature. So if people will be coming in here, it might be really, really expensive because there's going to be no vacancies.
Hmm.
So it'll be really interesting to see how that's going to play out this year.
Yeah, oh, I mean, you have to expect tourism will take a hit, and I think after it will be interesting to see how that affects the government because the thing is that there's the BC government goes to a vote in the fall,
Yep.
So,
And I was thinking about it, and this is why I thought they justified this move, right? Because they're looking at re-elections, they want to get votes. So they're like, well, how many people do own Airbnbs and, making profits? Probably a smaller amount. How many people are renting and, are not happy with the situation and the housing and the high rents and that is unaffordable. So they're really making all these moves to show that they're doing something to help people to get back into the market,
mm-hmm.
right?
Yeah,
So I
exactly.
think
Yeah.
it's a political move. It's not really, serving the whole, like they're not looking at, oh, Kelowna's gonna lose their tourism. They want votes, right? They don't really I
Mm-hmm.
think they're looking at it from there. Everyone is kind of looking at their own, what is it for them? And once you understand it, I think you can kind of see why this is all happening.
Do you think that
But
the amount of units, well, there'll be a larger amount of condos come available because of
100%,
all
yeah, I
this?
think I've already seen it. I've had last 2 weeks many inquiries and people, trying to figure out what they're gonna do, asking me if they should, sell, or actually most of them are literally like, hey, I need to know what my place is worth. I want to put it on the market.
Mm-hmm.
And, so I had today, I have another appointment, two more. So you must be seeing the same
Oh
thing,
yeah,
right?
for
Like
sure.
people are, hey, they like most of them will have to sell because they would have to put their own money to own it and to do the rentals. It doesn't make sense, right?
Well, it doesn't
Especially if
make
they
sense
bought
if
in the
you were
last two
someone
years.
who purchased in the last couple of years, but if you purchased 5, 6 years ago,
Yeah, if you have
and
enough
you'd have a,
equity, then
yeah, you've got
yeah,
enough equity, you can put a the other side of it too is if you put a long-term tenant in and they change the rules next year, you can't get the tenant out. So let's say you've put it, you stick a long-term tenant in this year, and next year they go back and say, okay, you know what, we're gonna tourism took a hit, we're gonna allow Discovery Bay, we're gonna allow Playa del Sol to go back to allowing short-term rentals, and you've got a long-term tenant in, you're not gonna be able to remove them unless
unless you're
you make it
moving
your
in
permanent
doing
residence.
renovations or they didn't pay the rent. But it's interesting because technically, everything that's been set up was mostly for students. But if you would have a long-term tenant for 6 months, technically you were not able to say, hey, we're going to kick you out at the end of the April because
Mm-hmm.
we want to do short-term rentals. That was not ever a thing, right? But because they were getting students in there, it worked.
Yeah, well, the
But
students wanted
technically
to
you were
leave,
not
so
allowed to. Yeah, students were like, we're out of here. But if you would have 6 months tenants, and I've seen it many times, technically you're not allowed to do that, to be able to say, hey, you can only have it for 6 months and then I'm gonna do short rentals. That's not a reason why you can end a long-term tenancy. I just want to make that clear that people don't understand,
right,
don't think
yeah,
that, hey, we
yeah.
can. So there's only three reason. Only if you're moving in, you're doing major renovation, which when you then have to offer it back to the tenant at the fair market value after you're done with the renovations, or that they didn't pay you the rent, and there's a process you have to follow, very strict process to get them out. But if you do anything that is, not by the rules, there is a huge penalty, which is 12 month off their rent. So if it's 2,000, it'll be $24,000 penalty for evicting the tenant for wrongful reasons.
Mhm. Yes, so you
All
got to be
right. So
careful.
so that's the Airbnb. If you guys have any questions, give us a comment. I'd like to cover everything that is out there and make sure we give you all the answers. And let's move on the first time home buyers. So some exciting news. Obviously, if you're buying and you're first time home buyer in the Okanagan, it's very difficult for you to even get into the market because our prices are third highest in Canada. So there are some incentives. So Josh, give us some details about what has changed.
Yeah, so the exemption for first-time home buyers has been expanded. So now residential properties valued up to 835,000 are exempt from the property purchase transfer tax on the first $500,000 of their value. And there's partial exemptions which apply to homes valued up to 860,000, which will
Hmm.
provide significant savings for a first-time home
Yeah, I think
buyer.
about $8,000, which is a big help, right? So, And I think that makes sense because really, like, unless you want to just buy an apartment, there's not really much out there in that price range where you can take advantage of this incentive, right?
Yeah, oh,
And
exactly. I mean, and for I mean that's this a lot of people don't realize too, especially first time home buyers. If you're an experienced buyer, of course you know, but just the cost of property purchase transfer tax is something you
Mhm.
have to factor in when you're purchasing a property, and legal fees as well. So,
Legal fees, inspection, right? Your down payment, there's lots that buyers have to also pay. And who knows, maybe moving forward, we might see that they have to compensate the agents, but that's another discussion, another
but as of now,
podcast.
Michael, a buyer is
As of
not,
now, it's
yeah, the
they
buyer is not
get
compensating their.
everything for free, which is absolutely crazy if you think about it, right? Like the time, and this is why our fee might seem really high, but the amount of time we spend with buyers and, writing offers, showing them, 10 houses and sometimes more, right? It's crazy that we are not being compensated for all that time, but we'll see if that's going to change. So now let's moving back into the newly built home exemptions because that's also some changes in there. And in it's starting at April 1st. So I think that some of the people that are trying to get in the market might wait for a little bit. And full exemption for newly built homes that is increased from 750 to 1.1 million, which now makes at least a little bit of a sense, right? As
Mhm.
long as they are smaller than 1.24 of an acre. And then there is a partial exemption between 1.1 million to 1,150,000. Again, same if it's smaller than 1.24 of an acre, and you have to be Canadian citizen, BC residents, and to be able to take advantage of it. And you have to move in, I think, was within 92 days, right?
And that doesn't mean that GST. I mean, GST is still applicable on freehold property. So you'd still be having to pay the
That's
five
right.
percent on the new build.
So you wouldn't have to pay the GST if you're buying on a lease land, right? That's another discussion, and it's just
Yeah,
something that everyone has to check in. That's, I guess, one of the benefits buying a leasehold property.
right.
But obviously there's some downsides to it as well. And so those are kind of the two big ones. First time home buyers, we got the newly built homes exemptions. And the last one, which I was surprised, I knew it's going to be coming eventually, but it's the BC home flipping tax.
Well, just to wrap up that the property purchase transfer tax,
Yeah.
the exemption changes for properties that are purpose-built rental properties. So if you're purposely building it for a rental property with 4 or more units, you'll be entirely exempt from the property purchase transfer tax. Actually, sorry, that
Hmm.
starts January 1st, 2025, and that will
That's right.
run till
Yeah.
December 31st, 2030. So if you're building
So
it
there's
for
some big,
rental.
yes, big incentives for really high density rental properties. They really want that market to grow.
Mhm.
And so that's January
January
2025.
1st,
So,
2025 is when the purpose-built rental property exemption kicks in.
okay, so those are some really, really interesting programs the government is offering. And again, I think that there's going to be some great opportunities. Everyone's sort of waiting what the market's going to do, but you can tell when they're really putting all this incentive to create a lot of new rental options. That means that they see that there's a shortage, there's not enough housing, and that's what I think that there's just a supply. Even though now we're about 10 months of inventory for single detached houses and think it's about 8 months for condos. They're anticipating us getting more people coming in, moving in, and seeing that there's just not enough properties available for rent, right?
Well, exactly. Yeah.
So now the BC home flipping tax, which is basically, when you're renovating a house, you were exempt as long as it was sort of your primary residence, right? And you could just sort of live in it, renovate it, and sell it. So now that tax will be 20% for income earned from the property sold within 365 days of purchase and will decline to zero between 366 and 730 days.
hmm
And BC home flipping tax will apply to income from BC properties sold on or after January 1st. So that's the same as the one we were talking about, 2025. And many other requirements will be applicable. So um, that's those are the big ones. Any thoughts on the flipping tax, Josh?
Yeah, I mean, well, there'll be exemptions for the flipping tax. So if you're going through a life circumstance like a separation,
That's right.
divorce, there's death, a disability, a relocation for work, involuntary job loss, change in household membership, personal safety, insolvency. So you can claim an exemption on that 20% tax. Um, but yeah, otherwise it is something they're putting in place to try and eliminate people who are just looking to buy speculatively or flip.
Right, but we haven't really seen that many, in my opinion, because the market hasn't
It's a
been
bit
sort of
late, right?
going
I
up.
mean, yeah,
Yeah,
it's a bit
yeah.
late in terms of the quantity of properties that are being flipped or sold for those reasons. But again, sometimes some of these things are knee-jerk reactions, and they come in and it's a
Yeah,
bit
they again, re-election, right? So they're just showing everything they can to see like it's kind of like showing that they're doing something to help the majority of the people, right?
yeah, exactly. It's like the 3-day buyer rescission period on offers
Yeah.
now. We all have to fill that out now in a contract of purchase and sale. But I mean, how often have you had buyers use that 3-day rescission?
We've only seen it once in our, we have 250 agents. We've seen it once, and literally the reason was not that they, got cold feet or anything, but literally they made an offer, got it accepted. The next day there was a property that got listed and was like $50,000 less and was basically the same setup. So they're like, okay, here you go. There's $1,000 penalty for us, re walking away from this contract, and then they end up buying the second one.
Yeah, I mean, so the and again, it was a knee-jerk reaction. It would have been beneficial when people were constantly putting in offers that were subject-free offers, and then maybe had regrets a day or two later. But
Yeah,
it's
that was a crazy, really emotional market, right? And I think that comes down to really the basics, and it never works. It's easy to say, hey, when you're seeing that everyone is buying, it's probably a good time to sell. No one wants to see it, right? But when you look back, everyone's like, oh, I wish I would have sell, in 2020 or 2021 when it was crazy,
mm-hmm,
but no one wanted to sell, right? Because
mm-hmm,
you're like, well, what are you gonna do? Like, I gonna be renting and pay crazy money, or I'll be homeless, right? So, but when you look back, that was the time to sell, but no one wants to put it on the market, and because it's kind of the greed as well, right?
mm-hmm,
Even if you
mm-hmm.
had rental properties or whatever, you could have sell at that time, but everyone was like, oh, I'll get even more money if I can hold on to it. And so I think that was interesting to look back, and we never know when it's going to stop, how far it's going to go, but I knew that at that time it was a good time to sell because it cannot last forever, right?
Yeah, oh yeah,
And
yeah.
then
Yeah, it
and
ebbs
I
and
think
flows.
now, yes, and now you're looking at it and there's a lot of uncertainty, right? And lots of indecision because there's half of the people are saying, hey, market's gonna crash. I'm waiting, right? I'm waiting to get some good deals. And then there's a second half that is seeing it the other way, and they believe that real estate has been historically one of the best investments, and hold of like basically hold the really good value over time and increase the value, right? And so it's kind of like half and half. That's what I'm seeing. And I would say that the biggest factors that are playing a big role now is that there's an anticipation that the interest rates will be coming down in the second half of this year.
Mm-hmm,
They're planning to do probably 2, 3 rate cuts. So that's, there's that optimism and seeing that, hey, it's going to be easier to get it in the market. So we're already seeing that there is a pent-up demand. That's the second thing. We're seeing a bit of a pent-up demand over the years that people are just trying to get into the market and just literally waiting for the rates to come down. And this might also help some of those people that just were not able to do it, that they have some new programs to take advantage of that helps them with the property transfer tax exemption on the new builds and on some of the houses. So
yeah.
so those are, I think, very important pieces. And then I think the third piece to this puzzle is that about 40% of all the mortgages were already renewed, and 60% will be coming for renewal in the next 2 years, which we're hoping that, lots like there's not going to be a huge amount of people that get caught up in this, going from 1 or 2% interest rate to 5, 6, because
Hmm.
that's obviously very difficult to still be able to afford your payments.
Yeah, if you were in a fixed mortgage and your mortgage comes due, and now all of a sudden you've got payments that are a few $100s or even more per month, it can,
Double. Some of them are
yeah.
double, right? But it's all based on and there are some options for people that are in those situations. They can extend the amortization, which will essentially lower their payments, but they'll pay less on the principal, so they will
Yes, they'll be
overpay on.
amortized until past their life expectancy.
Yes, it's crazy, right? But it's like a way that how you can hold on to the property, right? If you don't have enough equity or you don't want to sell. And this is where I think is the tricky part to estimate how many people will end up, in the position that they have to sell. They can't do anything else. They have to sell because they will not be able to afford it, and the amount of people that will be able to extend it or figure out a way how to carry it through the, maybe a few months of high interest rates and hopefully then coming down in the second half of this year.
Exactly. Yeah. 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 Might be a good time to take a variable, knowing that they're
Well, yes, they're saying, it's good to now probably have, as you said, variable, like not to commit for 5 years because they're expecting the interest rates will come down. However, I've been watching some of the economic reports,
mhm.
and there are some, because of the low unemployment and also the GDP growth, they're anticipating that there might be fewer rate cuts now because the economy is so strong. When you look at too close, like if I think that is, again, you're looking at the job report, and majority of them, from my understanding, were government jobs and part-time jobs, which they don't tell you, but they say, hey, that's, everything's looking good. There's lots of new jobs being created. So you have to really kind of look at the fine line because, again, everyone wants to look good coming into the elections and
Absolutely.
put positive news out there. And then the GDP, if you think about it, we've also took a lot of new people, new immigrants into the country. I think last year was over 1 million people that came in. So obviously that there is a growth just based on the number and people that are living in Canada. So, when you take that into consideration, I don't think that there was much of a growth in GDP. But again, it's just, it's fine print, trying to understand all these little details.
Yeah. Oh, yeah. You definitely have to do your own research, and when it comes to that, at the end of the day, it's if they can utilize that data to uh, decide what they're going to do with the interest rates. Um,
Yes, because that's
it
what
all
we
comes
don't
down to
know
what they
what's
do
going
with
to
that, what the
happen.
Bank of Canada does with that. So,
Yeah, if they decide, well, we're going to increase it because this is all really, the economy is still too strong. We're worried about the inflation. They might do the opposite. It's really based on, their interpretation of the data that they're getting, right? And the
mhm.
way they want to. So it's going to be very interesting. But let's round this all up. And I know there's a lot of people that are really thinking about, should we get into the market this year or should we wait? Is the market going to go up or down? And in my, if there's an advice, I would say really kind of depends on your personal situation. And you have to, as we've talked about, you got to do your own due diligence, see if that's the right fit for you. But if you're renting and you're paying, 2, 3,000 or more on your rent, you might be able to find a property and start building up your equity because more likely than not, the market's going to start to recover and the prices could go up again in the second half of the year if they will start lowering the interest rates. Because when they do, then it automatically creates a momentum, and usually there is a bit of asset inflation, meaning that the prices will go up. Now, there could be an exemption with the the apartments just because we don't know how much inventory we will be getting and how much that is going to be bought by, people or investors based on maybe new pricing. because if there's going to be a lot of people that will be getting out of the Airbnb and putting their units on the market, that could result into having an increased inventory and sellers sort of competing for buyers if there's a low demand in that sector, and essentially resulting into more of a buyer's market in apartment and condominiums in 2024.
I think this year will be condo market prices will dip slightly, and housing prices are going to increase just because there's still a supply and demand issue there.
100%
So
agree, because I think that when you look at the fact that when you're building a new house, it's going to cost you more. The labor is getting more expensive. All of the building material is getting more expensive. The land's getting more expensive. So there's really not, I don't see that, and the financing to be able to get the builder's mortgage and everything. And the builders are not really now buying and building spec homes because they know it's so expensive to be able to finance, and they have to put that in the purchase price so
hmm
they can
hmm
make some money, right? So all of these aspects are resulting again into increased purchase price or sale price on single detached houses.
Yeah, and at the end of the day, we always tell people like when you look back 5, 10 years, you're never gonna say, "Boy, I wish I didn't buy."
Well, Josh, how many houses do you wish that you would have bought 10, 15 years ago, 20 years ago,
No, I know it's like he just exactly,
right?
and yeah,
Like,
oh, for sure. I mean, we all wish we would have purchased more
so, and
property.
and then again, like if you're making a decision, and I would say with especially with the BC now flip tax and everything, it has to be a long-term decision. If you're looking 5, 10, 15 years, you'll be fine. You'll do really well, right? But if you're
hmm
thinking, oh, I gotta buy something now and flip it, make money, it's very unlikely that could happen. Maybe you'll get lucky, but it's very hard now to predict and
hmm
be like, yeah, it's
Higher
market's
risk
looking really good.
for
Yeah,
the
it's a high
reward.
risk. Like there are always good deals, right? If you find good opportunities, you can still, buy it and sell it in a year or two and probably make money, but you got to really know and get a good deal, and those are sometimes hard to find.
Yeah, and then fix it up. And
So
a lot of times, people are fixing up right now, and they're spending a lot more than they had anticipated on
yes, because now,
renos.
like especially I've seen it, right? We've seen some people getting into a market buying $1.4 million house and putting $400,000 into renovations and trying to sell it for over 2 million. It's not happening. And I've seen some of those, and they're bringing their prices down, and I'm kind of like, oh, they're about to start losing money. So, and again, it's the cost of borrowing and holding on to these properties cost you a lot more than it used to be, right? I used to have a HELOC on my property, and it would cost almost nothing just to on the interest rates because they were
hmm
so low. But now, it's like, oh my God, like I pay so much money on all this, just to being able to finance it, and just holding on to it, it's now expensive.
Yeah, exactly. Yeah, times are
And there's not
different.
that many, yeah, and there's not that many people that have all cash, right? Everyone was leveraged because money was cheap. You could
hmm
borrow money for almost nothing,
Yeah,
right? So everyone was taking advantage of it, and then a lot of people had the rug pulled under their legs because now it's 2, 3 times more.
yeah, exactly. Yeah, yeah. So that's why you need a
So,
good realtor and good mortgage broker to.
and yeah, good accountant and everything, right?
Yeah.
Just a good advice, because I know that and unfortunately, as you see, Josh, and we will see it again and again, it's all based on emotions, right? Like buying a property, this is this fear of missing out. Everyone wants to make money, and like we've had in 2020, we've had months where the market's gone up like $100,000 on average in 1 month.
hmm hmm
And everyone was like, oh my God, I gotta get in, right? And
Yeah.
15, 20 people in every house were trying to
It's
get
the
a piece
toilet
of the
paper effect.
pie.
Everybody needed toilet paper during COVID.
Right. And I was just like, oh my God, like what is this? Like I've never experienced anything like that. And I hope I will never see that again, because it was very difficult for buyers to get in. If you were a seller, yes, you were cashing out. But as I said, there was not that many that were willing to do it unless they were moving out of the, Kelowna area or Okanagan, and they could go to, that was probably the best move, sell in 2020 in the Okanagan, move to Calgary because they had a tough market there, right?
Yeah.
And that's, if you think about it, when you're looking at just real estate, it's almost like stocks, right? Sometimes you have one market is really up and the other one's down. And if you sell high and you buy low here, you can do really well. But it's all about the timing, and no one wants to make those decisions because everyone, has the seeing the potential, and they're like, I'm not getting rid of it now. Look how much money I made last month.
Yeah. Yeah, exactly. But over the
Right?
long haul, you should always do well in real estate, no
Yeah,
matter
so
what.
I think that now is the time to slowly start entering back into the market. And if you're building your portfolio, you don't want to buy like and spend everything at once. You want to almost dollar cost average, right? So basically you buy now, and if it's going to go lower in the fall, you can buy another one, or it just depends what your plans are. If some people don't want to deal with rentals, so they just want to find the house for themselves. But I think now you have the time to look around. One of the biggest thing I keep hearing is like, hey, I'll wait for the interest rates to go down and I'll buy then. And I'm kind of like, well, I've seen that market. And when there was 10, 15 offers on every single property up to 1 million, and it wasn't much easier for the buyers to buy a property when the
Hmm.
interest rates were low. I don't think we're going to see that because it's not going to go to, almost nothing. I think we'll be around the 4%. And I think it'll still be sort of balanced. But I already been seeing, if you're looking for a property up to $800,000, we've seen a whole bunch of multiple offers and very low inventory. So my anticipation and kind of looking forward, there might be very few houses in the 750, $800,000 single detached homes in the Kelowna area that you can get into like within the next month or two, because then I believe the prices will start going up, because
Hmm.
there's anything that comes up in that price range had one or two offers, it's gone. If it's priced well, if it's a good value, it's a good house, it's gone within days now.
Yes. Yeah, exactly. Yeah. Yeah. So it'll be interesting because the house market, the single family detached home market will be different from the condo market. So,
I agree. Yeah, 100%. So if you guys have any suggestions for future topics, I think we are about to wrap it up here. So let us know in the comments, and we'll get to them on the next podcast. All right. Thanks, Josh.
hey,
Great to
thanks.
having you.
Yeah, thanks for having me. Appreciate it. Anytime.